I think you can see the ill effects of the oil price declines. Resource and mining employment declined very sharply, and I think we're going to see more of that over the next few months. And I do think the dollar is having an impact. It's having an impact on manufacturing, which is weakening, and that had been a nice source of growth. And you're right, I think large multinational corporations, they're the ones who are going to feel it the most, and they're starting to pull back a bit. They're not hiring as aggressively. There's some weather effects in there, but I think that's, if I had to rank order what's weighing on the job market, it's oil first, it's the dollar second, and maybe some weather effects. I would have picked 248, 250. If you look at unemployment insurance claims, they're consistent with 250. You look at the recent job growth numbers, which are a pretty good predictor of what's going on now. That's been closer to 300,000 per month over the past 6 months. The Conference Board survey came out yesterday. That looked pretty good. So I would have said 250. But, I do think the ADP number is the best way of getting at the BLS number. So I'd say we'll probably get a print that's somewhere around 200K. As you know, ADP is private sector employment. Right. So throw in, 10, 12,000 for government.
When you look back at 2014, a lot of people underestimated the impact of weather on the first quarter, and people don't remember, but we actually had a contraction in GDP in the first quarter of 2014. I wouldn't be surprised to see us get a very weak number for the first quarter, and I wouldn't even rule out a contraction at this point. So I think the weather's having a massive impact on the data here. And to the extent that it starts to flow through to the markets, especially the bond market, as rates come down, that's going to give us stimulus going into the second quarter, the third quarter. So I don't see a real negative outlook.
We've heard 0% growth, but you actually think that number could go negative in the first quarter?
I think there's a risk of that.
And then what happens in the second quarter? Do we get it all back?
I think so. I think we get a pretty good bounce back, especially, given what's going on with housing activity. If rates continue to drop here, which I think is very likely in the near term, we could see a big pickup in housing activity, which would have a big impact on second quarter growth.